Hello everyone, this is David Blair and welcome to a video on Crosshairs Trading. And in this video I am going to focus in on a particular principle that Crosshairs traders discuss in CTU, which is Crosshairs Trading University. I also work with traders one-on-one in understanding how the market moves, how it works, and how to make money staying focused on a particular set of principles. The particular principle I want to talk about here is one of general market correlation with individual stocks. All I mean is, when we look at an individual stock for a particular setup that we trade, we want to make sure that the general market is in a position that will better accept the direction of that individual trade. In other words, if we're in a bullish market, we're going to trade bullish trades, bearish same. Or we're going to look at when we're in a consolidating market, which is what we've been in now here in July of 2011. We've been in it since February, basically, February, March of this year. We've been in a consolidating range-bound market. When we're in that type of market, we look for price support and resistance areas. And once we get from point A, let's call it support, to point B, resistance, or vice versa, we look to either exit trades, existing trades, or wait to enter new trades based on what the market's going to do at these particular areas. So right now, let me give you an example of what's going on. Right now we're looking at the S&P futures, which is one of the main gauges we look at to determine general market direction. But what we see here is, after a long trend, we've now entered a consolidation period. So we've had support in March, resistance the end of April, 1st of May, support again the whole month of June. It hammered out a support area here, and then we rocketed back up to a resistance level that we've seen before, which are the highs for the year. So basically what we Crosshairs traders were doing, we were looking for potential trades up when the market found this area here to be a stable area of support. Once we broke out of this area of consolidation, within the greater consolidation, we started looking at trades to trade up, stocks that were breaking out of a nice tight range, stocks that were firing in our software found in the TradeStation workspace. So what you're going to see is, you're going to see how the stocks that we've been looking at pretty much mirror the general market. And so once we got in, we looked for the market to go up to this resistance area, and as it was getting closer, we started closing out bullish positions. And the reason we were doing that is, once we got up to resistance, the likelihood after a multi-day run such as this is that we were either going to pause or reverse, simply because of we have seen this before, and the probability is we were going to pause or reverse. So we trade the probabilities. So keep that in mind as we look at some of these charts. Okay, let me move this over, and I have two other screens here, a daily and a weekly. We only look at two charts. We're big chart traders. We're not day traders necessarily. We'll be in trades for days to possibly weeks if the market is trending. But right now, as the market is in consolidation, we tighten up and look for to be in a trade for just a few days at the most. But let's start with when. One of the things that I have designed is, I've designed an indicator that tells us when a trade is set up on a weekly chart and the daily chart. And we look for correlation on the weekly and the daily, along with the correlation with the general market. So when we look at the general market here, you can see that when during the time that we had this nice rise in the general market from the support level up, when also moved up. Well, during that time also, our software fired what is called a DCH on the weekly chart. A DCH tells us to be looking for a potential trade coming up on the daily chart. Okay, so then we wait. We wait for the trade on the daily chart to set up. Now, since we were near resistance levels, we did not trade this breakout on win. What we want to do is we want to wait for win to rest on this breakout level, allow the general market to rest at this level. If the general market then turns back up and actually breaks out here, win will most likely be also breaking out of a consolidation area. So one, we look at the general market and we say we're not going to trade anything up right now until the general market tells us it's done resting or finished with its pullback and is turning to head back up. Then two, we look at the weekly chart on the stock, WIN, and we see that it's breaking out on the weekly. But in seeing the two green candles on the weekly chart, we know that there's already been an extended run on the daily. So now we want it to rest just like the general market. We want it to wait, come back, and then potentially give us a trade. And a trade will be what's called an itch. And we'll look for our software to fire this itch after a nice pullback. Okay. A good recent example would be PCP that we recently traded, and then we'll go back to some other examples setting up for potential trades right now. PCP had given us a DCH back at the beginning of April. Okay. So we were waiting on a potential trade which came here. So you see the correlation in April. DCH, an itch, which is our intraday crosshair. We were alerted to this with a DCH. At the same time, at the middle of April, middle of April, we were looking for a corresponding signal or direction on the general market. Well, in the general market, we also had an itch. So we had our go ahead on the futures chart, general market. We had our go ahead weekly big chart on the weekly, telling us to look for a corresponding trade on the daily, and then we got it on the daily chart here. And then our second one was we found our support here. We broke out to the upside, so we started looking at bullish trades as we headed back up toward a resistance area. Well, one of those bullish trades that fired for us again was PCP. We did not take this one because it did not break out. But this one broke out. The DCH is still valid. The stock is still trending higher. It's actually breaking out on the weekly at the same time it's breaking out on the daily. And the general market was moving in a consolidated area from bottom to top. So we had our general market, our weekly chart, and our daily chart corresponding and working well together. Okay. PCP went up 7 days in a row, much like the general market. and then we exited our trade based on a measured move that we discuss in our webinars and in our Crosshairs Trading training. Okay. Well, let's take a look at a few others. Coach, that's doing the same thing. Again, Coach moved up with the general market, COH, just as it did here. We've got a corresponding DCH here. We've had several corresponding DCH. We didn't take these because at the time the general market was rolling over May forward. Here's May. So we did not take these. We did not take this one because it is not breaking out. And then we had a breakout, potential breakout here. It was taking place after a 4-day rise. As we started getting near this resistance, we determined that this was not a high probability trade, that instead what we would look for is to wait again for the market to relax. Let Coach prove that this is an area of support, and then enter it if the market, general market, finds stability and starts heading back up. It may not happen, but if it does, it will be because this is working well. We've already got this, our weekly chart, and then we add our daily. So we wait on this one to set up to work with the general market. Right now it's rolling back over, so we're going to wait to see if it pauses to head back up. Alright, let's take a look at a couple more. Hog. Again, DCH. We already know that the market had risen here. Hog rose with it. Our weekly rose. We got a DCH. Now we're waiting at this breakout level, just like we're waiting at the breakout level on the general market. So we got our 2 here, we got our DCH. Now we're going to wait for Hog to rest and then possibly give us another itch or a crosshair trade. Here in our software will tell us that. Let's take a look at one more. And we've got a bunch, but let's take a look at one more here. JNJ. Alright. Again, J&J went up with the general market the last several days here. We got up to a resistance level. About the time J&J got up to its resistance level, broke it a little bit. We didn't jump in on that because we'd already had a multi-day move. Now what we're doing is we're waiting, since we've got number 2 here. We're waiting to see if J&J will continue its bullishness, and it will prove it by holding steady in this area and then breaking back out here and heading back up and giving us another itch or a crosshair. Combinations, high probability combinations. This is just one of the things that we look at to determine whether or not we want to put our money into a trade to make money on the bullish side in this case. Again, let me reiterate. General market. Where is the general market? Trending, support, resistance, sideways, consolidating market. Where's the individual stock? Is it giving us a signal on the weekly? And then we're waiting for the corresponding signal on the daily, as long as it's in conjunction and working with the general market. I appreciate your time, appreciate you watching my video. If you've got any questions or are interested in Crosshairs Trading, Crosshairs Trading University, please contact me at david@crosshairstrader.com. Have a wonderful day, and thank you.